In question number 3 and 4, you told me that you didn't solve it.
Yes, sir.
Can you tell me what is the problem? Yes. Question number 3 is a theoretical question here. State the ratio in which the partners share the accumulated profit when there is change in profit sharing ratio among existing partners. Yes, this question.
No, sir, not this one. It was the one which you sent in a PDF thing, the assignment of reserve, accumulated profit and loss.
Can you tell me the question number again?
So it was question number 3.
Okay, question number 3.
So I didn't take it from the portal, like the counselor, she sent me a PDF kind of thing.
Wait, let me see. Okay, Vanisha, can you repeat what you were saying? Actually, you are not audible at that time due to some outside sound. Can you repeat what you were saying?
Yes, sir. So it was the question, like the counselor, she sent me in a PDF on Sunday, sir.
Okay.
In that, it was the question number 3. And it was a numerical question, not a theoretical.
Okay. Let me see the question. Okay, it is X and Y are in partnership, sharing profit in the ratio close to 3. With effect from 1st April 2016, they agreed to share profit in the ratio of 1:2. For this purpose, the goodwill of the firm is to be valued at 2 years purchase of the average profit of last 3 years. This one?
Yes, sir.
Okay. So can you tell me what is the problem here? You have this quotient.
Yes, sir.
Okay. So, okay, so now you can see the quotient here on the screen. Yes. Hello, Ritika. Good evening.
Yes, sir.
Ritika, am I audible to you?
Good evening, sir.
Good evening. Okay, Vanisha. So your question is, in this question, we have to value goodwill. Okay. So we have to calculate the value of goodwill of firm on the basis of 3 years of profit. We have to calculate average, and then we will multiply it with 2. Okay, so it is 2 years purchase. That's why we will multiply it with 2 and we'll calculate our goodwill. The second information is there is a reserve appearing in the books at rupees 1,10,000. Partners neither want to show the goodwill in the books nor want to distribute the reserve. So they don't want to show the goodwill in books. So generally, we don't show the goodwill in books because it is valued goodwill. That's why we distribute between partners and then leave it. We don't record the goodwill in our books. The second thing it is saying that we don't want to distribute the reserve also. So I told you there was second case in accounting treatment of reserves, accumulated profit or loss, that when partners decide not to distribute the reserve, not to close the books of a reserve or accumulated profit or loss account, then we have to multiply the net balance of reserve accumulated profit with their sacrifice gaining ratio, and then the journal entry we will pass gaining partners capital to sacrificing partners. Yes.
Okay, sir.
Okay.
I was not.
So
I was confused with the second question. The first one I could solve, that is the calculation of goodwill. The second part I was.
okay. So let me just actually average profit you can easily calculate. It is 2 lakh 3 lakh 10,000, 5 lakh 10,000 means. Okay, let me solve this question for you. Actually, Ritika, do you have some doubt in assignment? I'm solving question number 3. Ritika,
Yes, sir.
do you have any doubt in assignment?
No, sir.
You have solved it
Yes, sir. I try to solve them.
and you have done all the assignment. There is no problem.
I couldn't complete the last 2 questions, but till then I will do the questions, sir.
Last 2 questions, 3 and 4. Sorry, 4 and 5.
Yes, sir. I couldn't complete them, but till 3 I've tried them, sir.
But you can do it.
Yes, sir.
Okay. So I'm solving question number 3 first. Please see this. Okay, so first of all, we have to calculate average profit. It is our working note number 1. Average profit will be 1,50,000 plus 1,60,000 and plus 2 lakh divided by 3. So 5 lakh 10,000 divided by 3. It is 1,70,000. This is your average profit. Now goodwill will be 2 years purchase. So 1,70,000 into 2, it will be 3,40,000. Okay, so now if we distribute this goodwill in gaining sacrificing ratio, for that we need working note number 2, calculation of gain or sacrifice of partners. So question is saying that their old profit sharing ratio was 2:3 and now it is 1:2. So for A and for B, it is 2/5 and it is 3/5. Now it is 1:2, so 1/3 and 2/3. 15, it's -5. A sacrifices 1/15 and B is a gaining partner here, minus 1/15. It is gain. Now we know the gain and sacrifice. So working note number 3 will be a division or share in goodwill. So they want to distribute their goodwill. So A and B share will be, the value of goodwill is 3,40,000 into 1/50. So we will get to 3,40,000. So it will be this. It is 22, 6, 6 and 6. So 22,667. Okay. So this is our share in goodwill. Okay, the next information is there is a reserve 1,10,000. So working with number 4, share in reserve. So it will be 1,10,000 multiplied by 1/50. 1,10,000 divided by 15, it is 7,333. So in both of the case, like distribution of goodwill and share in reserve, the journal entry will be same: gaining partners capital account debit to sacrificing partners. So gaining partner is B. So it will be B capital account debit to A capital. And we will pass entry with combined amount. So if we calculate total, we will get 30,000. Is this clear, Manisha?
So you have to combine the values and then.
Yes. We can pass the entries separately, but in quotient, it is saying that we have to pass the journal entry in single journal entry. You can see here.
Oh, okay, sir.
You are required to give effect to the change by passing a single journal entry. That's why we have combined the amount and pass a single journal entry.
Okay, sir.
Okay. Now, what is your doubt in question number 4? If you have any doubt also, Ritika, so you can also tell me. But yes, Manisha, first, tell me your doubt. Question number 4. It is also the second case.
Yes, sir. Sir, I guess now I'll be able to solve this, sir. I'll try
Okay,
this.
you will be able to solve this.
Yeah.
Okay. So I explained this a little bit. You have to calculate the net balance of these three amounts given in quotient. General reserve, profit and loss will be added, and advertisement suspense will be deducted. The net amount which you get will be multiplied with gaining sacrificing ratio of partners, and then we will pass journal entry gaining partners capital account debit to sacrificing partners. Okay. So now I'm going to solve a different question here. You can see here question number 6. Yes. Question number 6.
Yes, sir.
Yes. We have discussed the revaluation concept in our previous class.
Yes, sir.
Okay. So this question is based on revaluation. Okay. So Ashok, Bhim, and Chetan were partners in a firm sharing profit in the ratio of 3:2:1. Now, their balance sheet as on 31st March 2015 was as follows. Creditors 1 lakh, bills payable 40,000, general reserve 60,000, capital of Ashok, Bhim and Chetan is given, land, building, plant, stock, debtors and bank. These are the assets. Ashok, Bhim and Chetan decided to share the future profits equally with effect from April 1st, 2015. Okay. Now, for this, it was agreed that goodwill of the firm be valued at 3 lakh. Land be revalued at 1,60,000 and building be depreciated by 6%. Creditors of 12,000 were not likely to be claimed and hence be written off. Now, there is an information here. Prepare revaluation account, partners capital account and balance sheet of the reconstituted firm. So we have to prepare 3 accounts: the revaluation, partners capital and balance sheet. That is a statement. Okay. So wait a minute.
Uh, so,
Yes.
so actually, I was not there in the last class. So could you give a brief idea about what is this concept? Like in a short.
Okay, Vanisha, I will explain you. Revaluation account. Yes.
Yes, sir.
Okay, I will explain it to you. While solving the question, I will explain it to you. And
Okay, sir.
in the last, I will also discuss the concept. Okay. Okay, so this is your partner's capital account. And balance sheet. Okay, so we have prepared the format of these 3. You should also prepare the format. Okay. At the time of solving question, all 3 formats together. After that, we will try to solve the question. Okay, so the first account we have to do is revaluation account. It is question number 6A. Yes. So particular amount, particular and amount. Now, there is 3 partners, Ashok, Bhim and Chetan. So Ashok, Bhim and Chetan. I assume that you know how to prepare capital account, both of you.
Yes, sir.
Very good. So how we start our partner capital account? Can you tell me what is the starting point? Yes. What is the
So
starting
balance. The
point? Yes,
balance. What
balance. Very good. So let's start our question. So the question is, Ashok, Bhim, and Chetan decided to share the future profits equally. Their old profit sharing ratio was 3:2:1. So first thing we have to do is calculate the gain or sacrifice. So working note number 1, calculation of gain or sacrifice. Formula of sacrifices, old ratio minus new ratio. So A, B, and C. There, if you write their name in short, then you will get A, B, and C. So I'm writing A, B, C. Their old profit sharing ratio was 3/6, 2/6, and 1/6. Now they decided to share the profit in equal ratios, so 1/3 for each. We will get here 3 minus 2, that is 1/6. There is no gain or sacrifice in B. And here it is 1 minus 2, that is minus 1/6. So gain made by C, and there is sacrifice of A. No gain, no sacrifice of B. Okay. After that, the question is saying that goodwill of the firm we valued at 3 lakhs. So we have to divide our goodwill. Working note number 2. First of all, we have to adjust all the additional information of the quotient, and after that, we will put the balance sheet items to the respective place. Okay. So working note number 2. Sorry, not division. It is share in goodwill. So both gain and sacrifice is same, so we will write A and C together, and the value of goodwill was 3 lakh into 1/6, so 50,000. After that, land we revalued at 1,60,000, building we depreciated by 6%. Creditors of 12,000 were not likely to be claimed and hence be written off. So land value was 1 lakh, but it becomes now 1,60,000. So there is profit of 60,000. You can see that value of land was 1 lakh, but it is now 1,60,000. So there is increase of 60,000. That is our profit. That's why it is credited. Okay. When asset increase, the journal entry we pass is assets account debit to revaluation account. So here it will be land account debit to revaluation account. That's why land is credited in revaluation account. Okay. It is profit for us, and revaluation account is nominal account. So whenever there is profit, revaluation account will be credited, and when there is loss, then revaluation account is debited. So that's why we have written land on the credit side. After that, portion is saying that we have to depreciate building by 6%. Building value was also 1 lakh, but we have to depreciate it by 6%. Depreciate means we have to reduce the value of building. So it is loss for us. Now it will be debited. 6% means 6,000. After that, creditors of 12,000 were not likely to be claimed and hence be written off. Now, this is profit or loss for us. Ritika, Vanisha.
Sir, loss.
Loss. Okay. Vanisha.
So profit.
Profit. Why you are saying it is profit?
So because for credit, we have to pay it for the creditors, and when it was returned off, it was a profit for us, right?
Yes, very good. Ritika, it is profit for us because our creditors were 1 lakh and they are not going to claim their amount. Okay, 12,000 creditors will not claim their amount, so we have to write it off. Okay, we don't have to pay the amount. That's why it is profit for us.
Yes, sir. I thought we had to get the credit, sir.
Okay. Actually, in case of debtors, yes, if we have to write off the debtors, then it is loss. But in case of creditor, it is profit for us. So 12,000 is profit by creditors. 12,000. Now, is there any other information here? No. So done the additional information. Now the balance sheet information. First thing is creditors, 1 lakh. Now we have to prepare the balance sheet also. So we have to write all the assets and liabilities in balance sheet. Okay. So is there any change in value of creditors due to revaluation? Yes, we have to deduct 12,000 from the creditors in balance sheet. So we have to write all the amounts here. So creditors were 1 lakh, but now it is 88,000 because 12,000 will be written off. The second thing is bills payable 40,000. There is no change in bills payable in additional information. So the full amount of bills payable will be written in our balance sheet. Bills payable 40,000. After that, general reserve and their capital balance. Capital balance will go to partners' capital account and general reserve will be distributed between partners also. So it will also go to capital account. But first we have to distribute it. 60,000 of general reserve will be distributed. So working note number 3. General reserve is distributed in old profit sharing ratio. So division or distribution of general reserve. A, B, and C. 60,000 multiplied by 3 by 6. 60,000 multiplied by 2 by 6 and 60,000 multiplied by 1 by 6. So 30,000, 20,000 and 10,000. Now this will be transferred to capital account. So by general reserve. Okay, whenever there is any general reserve in balance sheet, we have to distribute those balance until it is written that we don't have to distribute it or we don't have to close the account. So without any information, we have to close the account. We have to transfer it to partner's capital account. So 30,000, 20,000 10,000. Now, after this, their capital balance was 2 lakh, 1 lakh and 50,000 by balance BD 2 lakh, 1 lakh and 50,000. Now, all the assets we have to write: land, building, plant, stock, debtors, bank. So there is two changes in asset side: land and building. Okay, land was 1 lakh and it become 1,60,000, and building was 1 lakh and it becomes 94,000. So land will be written at the old value, new value 1,60,000, building 94,000. After this, all the assets will be written at their book value: plant 2 lakh, 2 lakh here, and stock 80,000. After that, debtors 60,000 and bank. Debtors 60,000 and bank 10,000. There is no change in these accounts. That's why their old values are written. Now, there is a adjustment of goodwill in partners' capital is required. Who will give the goodwill? Who will give the amount of goodwill to who? Which partner will give the amount? And which partner will receive?
So partner A will give to partner C.
Okay, partner A
To partner C.
Partner A will give the amount to partner C.
Yes, sir.
It is just opposite. C will give the amount to A. Okay, C is gaining partner. He is gaining in the ratio, in profit sharing ratio. So for that, he will compensate A.
Yes, sir. I got it.
Okay. So A is sacrificing his share for C, and that's why C will pay the compensation to A. So C account will be debited and A account, means Ashok account, will be credited. And if we are writing in Ashok account, then we have to write here Chetan account. Chetan capital account. And here we will write to Ashok capital account, 50,000. Okay. Is this clear?
Yes, sir.
Okay. So if you have any question up to this, then you can ask. Otherwise, we'll finalize our answer. Okay, I think there is no problem. Vanisha, you understand the revaluation concept? Not fully, but what we have done here, you understood the part?
Yes, sir.
Okay. So now we will total both sides. The credit side is more than the debit side. So 62,000 here. Sorry, 72,000 here. 72,000. And now the balance will be transferred to partners' capital in their old profit sharing ratio. So partners' capital account 66,000. If we distribute these, A, B, and C will get 3 to 1. So 33,000 to A, 22,000 to B, and 11,000 to C. Now this will be transferred by revaluation. revaluation account, in bracket it is profit. 33,000, 22,000 and 11,000. After that, we will total our capital account because there is no additional information given or left. So we have to complete our all the accounts. 2,30,000, 2,80,000, 3,10,000, 3,13,000. 1,20,000 and 1,42,000. And 50, 60, 70,000. So 3,13,000, 1,42,000 and 71,000. To balance CD. 3,13,000, 1,42,000 and 71,000 minus 50,000, it is 21,000. Now these balance will be transferred here. Capital. Ashok. 3,13,000 and second was Bhim. Yes, it is Bhim. 1,42,000 and third partner is Chetan. 21,000. So the total is now 4,55,000 and 4,76,000. So we'll calculate the total here. 80,000 plus 40,000 plus 4,76,000 is 6,04,000. 60,000. $6,04,000. The balance sheet total should be equal to 6,04,000 and 6,04,000. Is this clear?
Yes, sir.
Okay, so you don't have any doubt in this question now? You want to take a screenshot?
So I wrote parallel.
Yes.
Sir, I wrote it parallel.
Okay, Vanisha.
So even I wrote.
Okay, very good. So now we understood the question number 6 here. Now you can see the question number 7 is almost same. Amount is half, I think, because land value was 1 lakh there and 50,000 here. Okay, so I think the question is same. So you can solve this question. Question number 7 will be your homework, and some of the question I will give you from the book. Okay, so we will solve those questions also. Okay. Now there is one more topic in revaluation. Okay, so we have understood the concept of revaluation. Okay, so this was our revaluation journal entry for increase in value of assets. All the journal entries written here. Okay, so assets account debit to revaluation and all the other entries. So was total 7 entries we have to record in our books if all the adjustment is given in the question. So total journal entry is 7. We prepare a revaluation account, okay, like this. And there is a second case also, case 2, when we don't have to give effect in our books for revaluation. Means if question is saying that the assets or liabilities will be recorded at their old value, in that case, we don't have to record the assets and liabilities at their new value, because it is clearly saying that we have to record at their old value. So in that case, again, we have to adjust the revaluation profit or loss in gaining sacrificing ratio, as we have done in reserve accumulated profit or loss. How we will do it? We will calculate the revaluation profit or loss in working mode. Okay, either you can prepare the revaluation account, or you will prepare a statement like where there is profit, then we will add those items, and where there is loss, then we will deduct those items. After that, after calculating profit or loss on revaluation, then we will multiply it with gaining sacrificing ratio. So like in this question, our revaluation is 60, revaluation profit is 66,000. You can see here 66,000, and our gaining sacrificing ratio, if sorry, gaining sacrificing ratio is given here. Yes, there is sacrifice of A and gain for B. So A is sacrificing 1/6 and C is gaining 1/6. So we will multiply our revaluation profit. In case 2, it will be share in revaluation profit, because we are not dividing or distributing the profit. So share in revaluation profit, A and C both is equal. So A and C, 66,000 was our revaluation profit. This you can calculate by preparing revaluation account or statement into 1/6. So it will be 11,000. Okay. Now the journal entry will be same. C capital account debit to A capital, means gaining partners capital account debit to sacrificing partners capital. Okay. So 11,000 here and 11,000 here. Okay. So in first case, we distribute revaluation profit in their old profit sharing ratio, but in case 2, where we don't have to give effect of revaluation in our books, we have to record our assets and liabilities at their old value. Then we will pass this journal entry for recording our revaluation profit or loss. So this is your revaluation concept in this chapter. Now, there is no theoretical concept left in this chapter, but in practical portion, you will find a portion of adjustment of capital. Adjustment of capital. So I will take this question for adjustment of capital also. Now, question will tell you to find out the proportionate capital of each partner as per their new profit sharing ratio. Okay, because profit sharing ratio is changing, so the partners can decide to maintain their capital according to their profit sharing ratio. Because let's say if A has, you can see here, A has 3,13,000 capital in the firm. Yes, but C has invested only 21,000. Yes.
Yes, sir.
Okay. Now their new profit sharing ratio is equal. Yes.
Yes, sir.
Okay. Now their new profit sharing ratio is equal, but their capital is not. Okay. So A can demand that each partner should invest same amount in the business. So the capital will be in proportionate to the profit sharing ratio. In the beginning, the profit sharing ratio was 3:2:1. So in this ratio, if we keep the capital can be 3 lakh, 2 lakh, 1 lakh. Okay, in proportionate to their profit sharing ratio. But now their profit sharing ratio is equal. So their capital should be equal. So A and B will demand this. If they demand it, then C has to bring some amount in the firm so that their capital will become equal. So how we will solve these type of question? Because we have to make our capital equal. So A capital is 3,13,000, B capital is 1,40,000, and C capital is 21,000. So we will find out the total adjusted capital. Adjusted capital means capital after all the adjustment. So we have done all the adjustment in our books, and after that we got the balance of partners' capital. So we'll first calculate total adjusted capital. Total adjusted capital. 3,13,000 plus 1,42,000 and plus 21,000. So our total adjusted capital is 4,76,000. Okay. Now their profit sharing ratio is equal. So we have to multiply it with 1/3. Capital of each partner. 4,76,000 multiplied by 1/3. So the amount will be 158. Now, this will be their capital. Sorry, 0.66. So the approx amount is 1,58,666. Okay, their capital should be this. But now we will compare this capital of each partner. Okay, let me ask a question here first. After that, we'll the capital of each partner we have calculated by 76,000 into 1/3. Now, if their profit sharing ratio will be different, not equal, like 5:3:2, then what we have to do?
So do we have to separately multiply the
Yes.
total capital?
Yes, very good. We have to calculate each partner capital separately. We will multiply 4,76,000 into 5/10, into 3/10, and into 2/10 for each partner's capital. And then we will compare this amount of their capital with their actual capital. Now, the A capital, the old capital, let's say. Old capital of each partner was 3,13,000, 1,42,000, and 21,000. Now the new capital that they should invest new capital should be 1,58,666 for each partner. Okay. So we will compare with their actual capital and calculate the balance. So it will be 1,54,334, and he has negative balance 16,666, and for C it is 1,37,667. Okay, so now their capital balance we get here: A, B, and C. B and C get negative balance. It means their actual capital is less than their proportionate capital. Means they have to brought the amount, they have to bring the amount of their deficit. It is deficit of B and C, so they have to bring this amount. 16,666 should be brought by B, and C will bring 1,37,667, and A will withdraw the amount because his capital, his actual capital is more than their proportionate capital. So he will withdraw the amount from the business. So tell me, is this clear to you?
Yes, sir.
Manisha?
Yes, sir.
Okay. There is one more method to calculate this withdrawal amount or deficit amount, like in partners capital account. Okay, now we don't have to write these balance 3,13,000, 1,40,000, and 21,000 in balance, because the balance will be as per the proportionate capital. So we have to write 1,58,667 here in each partner's column. So we will find the balance. We will write the balance here, and then we will calculate the difference. And while we calculating difference, we will get this amount. Yes, this amount. A will withdraw. That's why the balance will be on the debit side, and B and C has to bring the amount, so their balance will be on the credit side. Okay, so we will write buy cash in B and C and to cash in A capital. So that's we can do in our adjustment of capital. Okay, so this is our adjustment of capital. I will teach you the steps that we have to do in this adjustment of capital in our next class. So if you have any doubt in any of the topic in this chapter, because our chapters is going to come complete in our next class. So if you have any doubt in whole chapter, then you can ask question. If you have doubt, you ask question. If you don't have, then please tell me that you don't have any doubt.
So I don't have any doubt.
Yes, Ritika.
So I don't have any doubt.
Okay, Vanisha.
Sir, actually, with the reevaluation thing only, but then I'll get the recorded video of last class and then I'll try to understand.
Okay, okay. I will explain the revaluation concept actually a little bit so that you can easily understand. Ritika, our obviously class is complete. If you want to understand the revaluation again, then you can be here, but I'm explaining the revaluation to Vanisha. Okay. Yes. Okay, so the concept is revaluation is a nominal account. Okay, the nominal account rule is debit all expenses and losses, credit all income and gains. Is this clear to you?
Okay, sir.
Okay, now for increase in value of assets, we are discussing the journal entry. You can see here for increase in value of assets. If asset increase, it is debited, and if asset decrease, it is credited as per the rules of debit credit. And for nominal account, it is debit all expenses and losses, credit all income and gains. Okay, so if the value of asset is increasing, then it is profit for us. Means, let's say the furniture value we have, a furniture which value was 5,000, but it becomes 7,000 now. So it is profit for us, 2,000. So we will record assets account debit to revaluation account. Same with the decrease in value of assets. It is loss for us, so revaluation account will be debited. Where there is a loss, a revaluation account will be debited. Where there is profit, a revaluation account will be credited. Now, in the next concept, you can see here for increase in value of liability, it is a revaluation account debit to liability, because if our liability value increases, it is loss for us. So revaluation account is debited. For decrease in value of liability, it is liability account debit to revaluation account, because it is profit for us. Okay, so the revaluation concept is based on purely rules of debit credit. Unrecorded assets means we don't know that we have that assets, but it exists actually. We don't have recorded in our books, but it is existing in our business. So it is also a profit for us. So unrecorded assets account debit to revaluation account. Now, if there is any unrecorded liability, means we don't know any liability, but we have to pay it now. So it is loss for us. So revaluation account debit to unrecorded liability account. Now, after doing all these journal entries or preparing the revaluation account, you can see here, all the loss will be recorded on the debit side and all the profit will be recorded on the credit side. After this, we will calculate the balance of a revaluation account. Either it is profit or loss. Okay, and this profit or loss will be distributed between partners in their old profit sharing ratio. So the balance will be transferred to partners' capital account. Okay, is this clear to you? Manisha?
Yes, sir.
Okay, now so this is the concept of revaluation. The case 2, which I already told in the current class, in today's class. So case 2 is that